Sometimes we just buy things because we want to. We know we shouldn't, but we do it anyway. Now, I just did that with the stock that didn't meet any of my value criteria, and that stock is Walmart. So Walmart didn't meet on price to cash flow ratio, it didn't meet on dividend growth, and it didn't meet on return on equity. So what exactly was I thinking? On today's Build, Invest, Live podcast, we're going to walk through my Walmart evaluation, talk about how my personal experience with Walmart influenced my thinking, and why I decided to buy now in spite of all my rules. We'll also do a quick update on my dividend growth portfolio, and spoiler alert, we're finally seeing some signs of life. So let's get into it. So I genuinely love my local Walmart. And I know that sounds kind of crazy to say, or probably crazy even to hear, because all you ever think about when you think of Walmart are sites like People of Walmart, or like those videos on Black Friday where people are smacking each other with flat screen TVs or whatever. But my local Walmart is so nice. It's big, it's new, it's clean, they always have stuff. All the greeters and cashiers are super nice. It's like if there was this alternative universe where Walmart was like the best shopping experience ever. It's unbelievable. And I live in San Antonio, so around here, H-E-B is by far people's favorite grocery store. And I'm not knocking them. They're amazing. I love H-E-B. I just think my wife's at a point to where she's tired of hearing me talk about Walmart. She's just like, just stop. It's not going to happen. We're not changing. But that's how I got started on the Walmart kick. I just love going to my local Walmart. And I don't know if you guys do this, but I'll go to businesses around and I'll be like, this seems like a good business. I wonder how the stock is. You guys do that too? And then I just happened to get finished with the Sam Walton biography. I think it's called Made in America. I was listening to it on Audible, and audiobooks I love. I just listen to them all the time, especially business biographies. I'm just fascinated by other people's business stories and what they went through and how they succeeded or failed. And so that was a really interesting thing. I didn't know a lot of the history of Walmart or kind of how they came up. And that was pretty interesting to me. And then lastly, I signed up for and started using the features in Walmart Plus. And the funny thing is I had no interest in Walmart Plus. I didn't want it at all, but it came free with my American Express Platinum card as one of the benefits. So I decided, I'll just sign up. No big deal. And here I am. I'm getting free delivery. I'm getting discounts on gas. I'm getting, in-store rewards all through the Walmart app. And it's a pretty good experience. I actually kind of love it. So at that point, I was just like, okay, I really love what Walmart is doing as a business right now. Let's dig into this stock a little bit more. So that's what I did. And the first thing I saw is that Walmart's up actually pretty big over the past 12 months. It's actually outpaced the S&P 500, which is a very good start. But when I plugged in the numbers into my valuation spreadsheet and looked at my criteria, it didn't look so great. These numbers were actually from June 20th, so they've changed a little bit since then. But this is what I was looking at the time. So the price to cash flow was at around 21 to 23. Return on equity was a little bit over 15%. And dividend growth in the 10-year was 2.75%. And in the 5 and 3 year, it was under 2. I mean, yuck, right? So at this point, I probably should have just closed the browser and walked away. There was nothing to see there. Like all my primary criteria, it didn't meet. And this is where my personal experience with Walmart probably influenced my thinking a little bit too much. And again, when it comes to investing in stocks, I don't think you should ever be too emotional or overly attached to any company or any stock. That's usually not a good recipe for success. But all that great advice aside, I kept trucking along. I really wanted to like the stock. I loved the business and I wanted to like the stock, but it just wasn't meeting any of my criteria. So I decided I was going to dig a little deeper to see what I can find. And what I found was actually kind of interesting. Revenue growth year over year and forward-looking was up and substantially higher than their 5-year average. Free cash flow per share and operating cash flow was also up big and substantially higher than their 5-year average. So what I took from this is that Walmart's revenues are strong and growing, and the amount of cash that they're keeping from those revenues is increasing as well. That is very good. But what I wasn't sure of is whether this was just a point-in-time thing or a trend that I could expect to continue. I was looking through the most recent transcripts of the investor calls with the Walmart management team, and I found this nugget from Walmart CFO John David Rainey.
We've made a lot of investment over the last several years. We'll continue to invest in these high return areas that have a very clear payback, but I think we're in a different spot than we were 5 or 10 years ago, where we clearly had some gaps that we needed to address, whether it be in pricing or investments in our associates. And so as we sit here today, we'll continue to invest, but we're at this inflection point where we are beginning to see the benefits of these investments. And we hope that you will be able to as well in terms of operating income growth at a higher rate than sales or return on investment increasing. Again, I think the last year has obscured some of the progress here. Notably, I talked about the mix change in our business that affects that, but we're seeing good improvement this year and quite excited about what next year and the few years after that holds.
And then he followed that up a little bit later with this.
Yeah, so we've been public with this algorithm, for lack of a better term, of having 4% sales growth with operating income higher than that. We're not immune to the economic pressures, so it's tough to say that, yes, we can absolutely commit to doing that in any economic environment. I don't think any company can say that. What we're saying, though, is that we're positioned to succeed over a multi-year period with those types of numbers. I think, and we'll talk more about this at Investor Day, that the opportunity is far in excess of that, particularly on the operating income line, when you look at the returns that we're seeing around some of these investments that we're making.
So what that means to me is that the Walmart management team expects the trend of operating income and cash flow growth to continue. And if that happens, it should be very good for investors. Now I would expect their dividend growth to go up or share buybacks to increase, or maybe even both. But either way, it was enough to convince me to buy into Walmart, even though it didn't meet any of my value criteria right now. So I did. I bought 100 shares of Walmart at $154.40 a share on June 20th. And I think this would be a good experiment as to what happens when I break my own rules and if my thoughts around Walmart's revenue and operating cash flow growth actually come true. But only time will tell. Before we get into my portfolio update, I just wanted to share with you guys my experience with Seeking Alpha. A few months back, I started using the free version of their site, and I loved how much information I could get in one place. I decided to do a 14-day free trial of their premium service, and I was blown away with how much it helped me manage and research my own stocks. This Walmart buy that we just walked through was a great example of that. All the valuation data around revenue and cash flow growth and how that compared to their previous 5 years was right there at my fingertips. And having quick and searchable access to transcripts was what put me over the top on this buy decision. I wanted to know what the Walmart management team's thoughts were on the operating efficiencies, and I literally opened up each transcript and typed in operating to be able to find their comments. Amazing. After my free trial was over, I signed up and paid for a 3-year premium subscription, which I know sounds crazy, but with how much value and time savings I get out of it, it makes perfect sense. And I've loved their service so much that I actually reached out to them to ask if I could become an affiliate. So if you want to try out their premium service for 14 days risk-free like I did, you can now use our new affiliate link at buildinvestlive.com/seekingalpha to see if it makes sense for you too. The ability to cancel is right there online, so you never have to worry about getting stuck with something that you don't like. All right, thanks for hearing me out. Now back to the show. So the last time that I gave you guys a portfolio update, my dividend growth portfolio was sitting at like less than 1% gains year to date, way underperforming the S&P 500, and it was pretty pathetic. But we're starting to see some signs of life. As of today, the portfolio is up over 5%, so it's had a nice little run over the past month or so. And believe it or not, it's actually a little bit better than it looks too, because I've recently added a bunch of positions to the portfolio, which are skewing the numbers a little bit. Since the last time, I've added the following purchases: 100 shares of United Healthcare, which we've talked about, 100 shares of Walmart, which we just talked about, an additional 50 shares of American Express, and over 500 shares of SCHD, which is Schwab's Dividend Equity ETF. And you might be like, dude, what are you doing? So I had a bunch of cash in my HSA account that I was just kind of waiting on to invest. And I recently put pretty much all of that into SCHD because I think SCHD is pretty undervalued right now. But I'm going to go into more detail on SCHD and what I did in next week's episode. But yeah, when you look at the year-to-date performance of my holdings, they're doing all right. They're still not quite up to par with the S&P 500 since Apple and some other tech companies have been on a tear. But I feel good about where this portfolio is headed. I mean, slow and steady, quality companies that pay and grow their dividends over time at a rate that's higher than inflation. I mean, that's the plan. So I'm sticking to it. And I'm glad that there's been some signs of life, but I think it's going to continue. I'm really not too worried about it. Now, back to Walmart real quick. You know, sometimes you just have to buy that thing that you want and you justify it however you want to justify it. And for me, you know, I definitely believe in Walmart as a business. There's no question about that. The question will be whether or not the stock meets my expectations over the long term. At the end of the day, we'll see. But it's one of those cases where you break your own rules and you hope that you just don't get burned too bad. Anyway, thanks for listening to this week's episode of the Build, Invest, Live podcast. Financial independence is true freedom, so keep building and stacking those wins, and I'll see you guys in the next one. Peace.